Hello, how's it going everyone? Mario here. Thank you so much for tuning in. I wanted to do this for a while, quite some time. So in this video we're gonna talk about introduction to AVWAPs, and we're gonna talk about how to manage the risk. We're gonna talk about execution as well. So it's a lot of questions which has been asked in the server for quite some time. How do I go about setting my stop losses? How do I go about cutting my losses early, or cutting my winners, managing my losers? We're gonna talk about all of it, every single one of it. So I'll try my best to answer every single one of your questions as well in this stream. Alright, so how many of you lost money trading, buying puts on Thursday, Friday, Thursday, Friday, and Monday today? I'm pretty sure a lot of them did. And we're going to go over the price action on these 3 days in particular. We're going to study the price action of these 3 days and see what you could have done. And we're going to talk about execution more, other than just me telling you how to find support or resistance levels. You already know that. You already know how to find support and resistance levels. It's not a big deal. Anyone can do it. But executing the same support and resistance levels with a proper stop zone, you wouldn't find a lot of content out there. So we're going to talk about that part in particular. So here, first things first. There are two things which I want you guys to keep in mind. Always have this ticker. If you don't have TradingView, open a TradingView account. A link to that is in the description as well. So open a TradingView account. Don't even look at the charts with Yahoo Finance. It sucks. If you're going to use AVWAP, you can't use Webull. You need TradingView or any other top performing platforms like Fidelity or TOS. So one thing to note before starting up. So now this is ES1, the S&P 500 futures contract. That's the ticker. So when everyone says the futures are up, the futures are down, this is what they're talking about. This is what I'm talking about. This is like the S&P 500 futures. So unlike SPY, this trades 23.7. So 23.6 particular. So they open again at 6 o'clock today and trade until the next day, 5 o'clock. So it's not going to close overnight. So keeping an eye out for this is going to help you out when trading SPY or QQQ in a big way. One more thing to note. Did you notice how clean my chart is? This is what's going to make you money. It's the representation of the price. The cleaner it is, the less cluttery your mind will be when trading the same during the session. One of the major things you will notice in a lot of traders is that they'll have like 100 lines in the same chart for every 20 to 30 cents move. How will you ever even trade that? Where will you set your stop losses? How do you even know if that's a support or resistance levels? The answer is you don't. You don't know if a particular level is a support or resistance until after the fact it actually happened. Let's say before market opens, you see a lot of updates on the server saying that, oh, SPY, this level is a support, this level is a resistance. And you buy calls after that level is broken, only to get stopped out. It reverses back immediately. And let's say like you buy puts at the resistance levels just because someone said so, and in 2 minutes you got stopped out again. Have you ever been in that situation? I'm pretty sure most of you have. That's the problem here. So you blindly buy into these so-called support and resistance levels which you drew, and then get stopped out immediately because markets doesn't care about your levels. It's gonna do what it's gonna do. So don't buy support and resistance blindly. We need to buy the strength after the support. They touch the support and bounce, we need to buy the strength, not the support level itself. Same with the resistance as well. We need to buy puts at the weakness after the resistance levels, not the resistance levels itself. That's how you're going to get stopped out pretty quick. Regardless of what you do, you just because you drew two lines doesn't make it support or resistance levels. So I just want you guys to remember this. Write it down, keep it in front of you every time you take the trade just because it touches a support or resistance. It doesn't work like that. If it's that easy, everyone will be a millionaire right now. So with that being said, most of the traders fail not because of their ability to identify support or resistance. Anyone can do that. If you're just starting to learn technical analysis, and in 1 week you'll be in a spot to like identify support or resistance. Traders fail because they don't know how to properly execute the same. A badly coded bot will give you the support and resistance levels. If you're new to the market, note that it's always about execution and risk management. As I always say, you can be a great technical analyst, top notch, right? Top of the line. And you will still lose shit tons of money if you're not managing the risk properly. On the other hand, you can absolutely suck at analyzing the price. Downright trash. But if you have a proper risk management, you'll outperform all these bimbos easily. At the end of the day, it's not about how good you are at analyzing the price, it's about how good you are at managing the risk and protecting the capital. But Mario, I've been hearing the same from a lot of bimbos. How will I go about execution? Alright, let's talk about it. Let's talk about AVWAP. Before I jump into it, let me delete everything in my charts. We're gonna start fresh. If you have TradingView, I would recommend you guys open that and open this ticker right over here, ES1. So when you look at this chart, this is the S&P 500 futures. This is the daily time frame of S&P 500. If you want to add, if you have TradingView, if you don't have TradingView, and if you want to open a new account, I've given the link down below in the description. You can go ahead and click on the link and then open a new account, and you can use the free version as well, and that will very clearly do you what's needed to be done. Especially if you're not using so much indicators like 15 EMAs or like RSI, MACD, all those are absolutely useless if you think about it. It doesn't offer any value whatsoever at the end of the day. So now, if you look at this chart, there are two price points which stands out. Just two, for now. One is the all-time highs, right over here, which is around 4800, so 4803 in particular. And the next one is the 52-week lows, which is all the way over here, which is at around 3500 and change. Why these two prices are important? There's a lot of prices in there, but I'm technically highlighting these two prices. When the price touched these areas, we had a massive reaction, either to the downside or to the upside. Over here, price touched the all-time highs and gave a massive move to the downside. Let's see how big of a move it is. From here to the top, all the way to the downside, like all the way to the 52-week close, it was a 27% move to the downside, which makes that price an important area to keep an eye out for. Now, same with the 52-week close, so 3500s. This is important because price tested these levels and they never got back again to the same levels. They moved all the way up to 20% to the upside, which makes this level important as well. So now, we know two important levels. When the price gets there, what you'll do, without AVWAPs, you're just going to draw one line over here saying that it's a resistance, and one line over here saying that it's a support, and what you're going to buy once the resistance is broken to the upside, and you're going to buy when the support is tested to the downside. That's how you've been doing it. Now, we need to talk about AVWAPs. How is it going to help? What's the difference between anchored VWAP and the regular VWAP? You must have heard this term VWAP a lot of times, but anchored VWAP is something pretty new. So let's talk about it. Now we'll just touch base with both of them. So if you're trading for a while, you must have heard this term from a lot of traders. If the price is above VWAP, it's a buy. If the price is under VWAP, it's a sell. Wrong. But what is VWAP though? VWAP is volume weighted average price. That's the full form of VWAP. It technically just tells you the money flow into the particular session. For example, let's say like let's take today's session. And if you take today's session and the VWAP from the morning opening trend, if you draw one right over here, you can see the positively sloping VWAP actually told you that the money flow was positive until afternoon. A positively sloping in the sense the VWAP is actually curling to the upside. This, like this. Negatively sloping refers to, oh my days, what is that? Negatively sloping refers to something like this. So, VWAP just tells you who's in control of the money flow, who's in control of the trend. If the buyers are in control of the money flow, you will see the VWAP curling to the upside. If the sellers are in control, you will see the VWAP curling to the downside. That's all it is. One more thing to note. VWAPs are not support or resistance levels. Moving averages are not support or resistance levels. Same with EMAs, same with SMAs, regardless of what you use. They are not support or resistance levels. Don't buy them blindly just because a stock comes in contact with 50 SMA or 100 SMA or 200 SMA. No, it's the slope at which these moving averages are sloping matters the most. That's going to give you more data on who's in control of the trend, which is going to help you make the decisions wisely leading into the upcoming sessions. Let's say like the moving averages are curling to the downside, and when they touch the 200 SMA or 50 SMA, you buy right over there, even though you know that the sellers are in control. Well, you're going to get whacked because they're not going to hold that moving average, because as I said, moving averages are not support or resistance. Especially I've seen this in a lot of traders in the Discord saying that it touched the 15 SMA and it's bouncing, it's touched the 250 SMA and it's bouncing. No, those are not support or resistance levels at the end of the day. So now, VWAP, it's just the money flow. It's going to give you the money flow of what's happening, who's in control of the trend intraday, who's in control of the trend in the longer time frame. It's going to tell you all that. The difference between AVWAP and VWAP here, the VWAP opens at 9:30 and closes at 4. It opens when the market opens and it closes when the market closes. Then the next day when the market opens, you'll be getting a new VWAP. And the next day when the market opens, you'll be getting a new VWAP. So the VWAPs doesn't remember what happened in the previous sessions. So you're only going to see the data which is from the opening print to the closing print of that particular day. This is where anchored VWAP steps in. Unlike VWAP, anchored VWAP actually has price memory. So with the price memory, you can actually anchor it anywhere you want, and it's going to remember and it's going to update on a real-time basis. So that is the major advantage of the anchored VWAP. Again, before I go any further, this is just a basic overview video how I use anchored VWAP in my trading strategies. If you want to dive deep into the same concept of anchored VWAP and learn more about it, I've attached a link in the description for the Brian Shannon's book, who's the creator of AVWAP. I'm just another student who is passing along what I have learned at the end of the day. So now, open a TradingView account if you don't have one. We already covered it. I've attached a link to it down below in the description as well. So now, how to attach this anchored VWAP? If you already have TradingView, it's pretty simple. You don't have to go to indicators. You don't have to do any of that. You don't have to do all that shit. Go to indicators and type AVWAP. No. TradingView actually gives you inbuilt. So on the left side, click on this trend line tools. Once you click on it, go all the way down, you'll see anchored VWAP right over there. If you press the star in there, you'll get it right over here in the shortcuts, so you can use it anytime you want. And if you want to attach it anywhere, you can do it anywhere you want. So once you click on that, you can click on any candle which you like to attach the AVWAP to. It's going to anchor it to that particular area. That's it. Simple as that. You can anchor it anywhere you want. We will talk about how to go with anchoring and where to anchor the AVWAPs and all those stuffs in the upcoming sessions of the same live stream. But for now, this is how you attach the anchored VWAPs. This is how you go about setting one up in your TradingView. So let me go over it again. So click on here, trend line tools. You'll see anchored VWAP right over here. Once you click on it, it's the same thing. Once you click on it, you can just attach it. Click on any other candle which you need to attach it to. Voila, right over here, you got the anchored VWAP. Now, let's go. Remember me talking about two important prices in S&P 500 futures? Let's anchor both of them. Let's anchor both. So this is the all-time highs candle. This is the daily time frame. So all-time highs candle right over here. We're going to anchor that. And we're going to come all the way down to anchor the 52-week low candle as well, right over here. Now, let's take some time to analyze the same chart. You can see the importance of both of them right over here. As I said earlier, anchored VWAPs are not support or resistance levels. It's the slope which is going to help you a lot in making decisions when it comes to taking the trade. It's going to help you out when it comes to execution of the trade as well. So we'll talk about execution in a bit when I paper trade the same trades which I took earlier. So we will go over that in a bit. But first, observe the same chart which we drew. We drew anchored VWAP from two important areas. One, the all-time highs, and two, 52-week lows. You can see how the price reacted every time it came in contact with that anchored VWAP. Look at the slope. Look at the slope of this AVWAP, negatively sloping, pressured by sellers. Again, negatively sloping, pressured by sellers. Flat, no one is in control, and continued with the downtrend. Again, you might see some instances where these AVWAPs bringing in sellers, or where these SMAs or EMAs, it's the same with every single thing. There is a possibility of it acting as support or resistance sometimes, but don't take it as a face value and blindly buy into it. We buy the strength after the bounce, not the support level itself. So always remember that. Now, when everyone was too bearish 3 days back, see where the price bounced from. Pretty interesting. We drew an AVWAP from the 52-week lows. Look at where the ES bottomed at, the S&P 500 bottomed at. If I do the same with SPY, I know most of you don't trade ES here, so let's do the same with SPY, not this one. Let's try it out. Alright, let's go. Now, we're going to draw the 52-week low anchored VWAPs on SPY. Let me remove everything else. Go ahead and try it out with SPY as well, since I know most of you guys trade SPY regardless. So, 52-week low, and we're going to go to all-time highs, and we're going to add one right over there. Check it out. Check out how the price reacted from the all-time lows AVWAP, and check out how the price reacted from the 52-week lows AVWAP as well. And see where the price bounced from on Thursday. Pretty interesting stuff, isn't it? This is nowhere a coincidence or accident. It happened for a reason. We didn't buy it. This is not retailers who moved the money. It's institutions who bought it here. Even though it's not relevant in the volume, we are still going to assume that if the price is going to move this big, it's not because of the retailers. It's because of some sort of institution participation, because they are the only persons who can actually move the price. You and me, we cannot do anything. So now, pretty interesting. The question now becomes, we anchored the all-time highs, we anchored the 52-week lows. Now, where to? Where other places? Where are the other places you can potentially anchor it to? That's the important question which comes in. So this is where we're going to dive into the intraday time frames. We're going to talk about Thursday's price action in particular. Remember the Thursday's price action where we went absolutely nuts to the upside and then follow through on Friday, and even today we were just flat, so nothing happened today. SPY literally closed flat where it opened on Friday, where it closed on Friday. It closed right over there even today as well, which is pretty expected after two big moves like this. So let's go to 2-minute charts. 2 minute, 1 minute, it doesn't matter. So the red line, we're going to delete every single thing in here. We don't need any of these. Let me delete every single thing. Now we're going to talk about execution. How do you go about executing the trades? Because that's what's going to make you money. You can have 2 support resistance, you can have 100 lines in here. That's not going to make you any money whatsoever if you're not executing them in a proper way. So leading into Thursday, I had like 2 important levels in mind. One, let me draw my pivots first. Because before market open, we all will be getting this notification saying that, oh, this level is support, this level is resistance. So if the market comes down here, do this. The market goes down there, do that. Well, let's see. 290.50 was my first level. And the second level was 393.50. Let me just draw it out for say. There we go. Alright. So you can clearly see the market actually opened right in middle of both of these levels. I'm pretty sure this is when most of you guys put your blindfolds on and started buying puts because you were expecting markets to go all the way to 390 to the downside. Now, let's see how to use anchored VWAP when it comes to execution. Let's say you have 2 levels, alright? So you have 390, 355, that's the resistance. You have 390.50, that's a support. That's your support, not the market. You don't know if these levels are going to be support or resistance or not until after the fact it happens. So let's say without anchored VWAP, what you would have done. Let's say like you bought puts and you went all the way over there and then you panic sold right over here only to see it reverse back again. And then you saw these three candles, and then buy puts again, thinking that it's going to go back down, and you saw this happen. And then it pushed higher, and then broke the resistance again, and you get stopped out. And then you saw this happens, you buy puts again, only to see this happen. Because you don't have any plan before entering the trade. Where will you set your stop losses if you blindly buy puts in these resistance levels? Nowhere to set your stops at. Let's say it just pushed higher. Let's say you put your stop losses over there, and then they will stop you out right over here at this price point, and you will see price coming back down again. These are all beginners' mistake. You don't know what you're doing. Like, it's a stop losses, you don't know where to set it in a proper way. You'll be right, perfectly good with your trade. You'll be like 100% right with your entry as well. But you'll see the contracts move down like $20, and then you'll panic sell because you didn't have an initial plan in the first place. That is a big problem. I had a guy who sent me a screenshot yesterday saying that he got stopped out on Tesla. He could have made a lot of money on the trade, but he got stopped out because he saw the price go down like $1 or something. After he entered, he panic sold immediately, only to see the Tesla rocket up like $4 or $5 after the fact. If you don't enter a trade without a plan, you're gonna get whacked like this multiple times over and over. Now, we'll add AVWAP. Pretty simple. These are my rules. You don't have to follow the exact same thing which I do. But this is what I do. You can use the AVWAP into your own trading strategy and structure it in a way which makes sense to you. There is no one way to take the trade. I'm going to talk about how I do it. I have a certain set of rules which I follow. If those rules are not being met, I won't take the trade. That is discipline. Even if I see a good trade, if it's not giving me a good risk to reward, I won't take the trade. I don't want to force anything. There is no need to FOMO on one particular position because it's not going to help you in any way. You can FOMO. It's better to have just stay out of the market. It's rather to just like, it's okay. If you're feeling the FOMO, take a step back. It's fine. You don't have to trade it. It's all good. Rather than taking a trade and then wishing that you never took it in the first place. It's better to miss out on opportunities. There's always better ones coming in the future. So, that being said, now, first things first. Go to 1 minute charts. When the market opens, let's go to Thursday. Where is it? Right over here. Immediately when the market opens, this is what I do. Anchor it to the first candle. Anchor the AVWAP to the first candle. So let me replay the same session. You can see how it went on. This is how it would have played out when the market actually was open. So I'm not going to do the hindsight thing. So Thursday market open right over here at 392.50. Most of you guys shorted it right over here. And let's remove the AVWAP for now. So if by the time you're looking at this, I'm pretty sure you will be having the flashbacks on what you actually did during the session. If you remember what you actually did, and if you lost money by buying puts, I want you to write it down, because this is the exact replay of what happened on Thursday. If you bought puts anywhere around this area and got whacked and then took it all the way to the upside, well, I want you to write it down, because you need to learn how to trade the same. You need to rectify the mistakes. If you need to rectify the mistake, you need to actually know where you went wrong before even correcting it in the first place. So now, we need to talk about a certain set of rules. Do not trade in the first 5 to 10 minutes of the session. Do not even consider opening any new position for intraday trade in the first 5 to 10 minutes. Let me tell you why. I don't know how many of you are aware on how institutions actually operate. Unlike us retailers, they can't buy and sell immediately like how we do. Let's say you buy 100 contracts in options on SPY. You can just sell it immediately. You can just sell all the 100 at once. Market is not going to give a shit at the end of the day, because you selling your 100 contracts is not going to move the price of S&P 500. But if the institutions who has billions of dollars in their hands, if they do the same like what you did, it's going to cause an absolute destruction in the price. Institutions have certain set of rules when it comes to buying and selling. So during the market open, that's where you'll have the crazy amount of liquidity. The institutions usually use this liquidity to either buy up or sell certain amount of shares in the first few minutes of the session. they are kind of tricky sometimes. They will gas the price up in the first few minutes, luring in as many buyers as they can, only to whack it right in their head by shorting it. They push the price up, only to go short and then push the price all the way down. Or they dump the price right at the market open so they can buy it up for a cheaper price and then rip it right back up. Again, this is not manipulation. This is how it is. Don't play the game. Don't blame the game. This is how it is. Try to how to play it properly. I know it's fucked up. This is how it is. This Wall Street is not a nice place to be. You're swimming with the sharks, so you gotta deal with it. So stop complaining about how manipulated it is. Instead, learn how to swim with sharks. That's all you can do. So now, rule number 1, don't trade for the first 5 to 10 minutes of the session. Take a step back and see what the price is doing. Add the AVWAP to the first candle. So let me remove this AVWAP for now. So now you see the time frame right over here is around 9:48. So let's add the AVWAP to the first candle right over here. As I discussed earlier, if the price is under AVWAP and the AVWAP is negatively sloping, it means the sellers are in control. If the price is above AVWAP and the AVWAP is positively sloping, which means the buyers are in control. Now, if it's just flat, it means the price action is neutral. You need to wait until you get more confirmation from the buyers that they're going to push higher, or you need to get more confirmation from the sellers that they're going to push it lower. Pretty simple. Now, let's say right over here, let's replay the session. Let's see what happened. As I said, we need the price above the AVWAP. You got your confirmation. You will get it in a bit around 9:50. You'll see them right over here, bursting right above the VWAP. You have your pivots. We'll talk about that. You have your pivots at 193.50. You don't know if it's the market's pivots or not. That's your pivots. You have your pivots at 193.50, and let's say right over here, this candle is sped up for you, but during the market session, you can see the AVWAP positively sloping, and you can place your entry right over here when they closed above the VWAP, came back to run a test, and your stops should be the lows of the day right over here, which is at around 392.33. Now, even with options, how will you go about setting the same stops with the option? Now, that's something you need to work on. There's something called as delta in the options. When your entry, let's say, is at around 392.87, and you set your stops at 392.23, you're technically risking around 50 cents on this trade. Let's say if you buy 393 calls with a delta of 50, you'll be technically losing $25 for 50 cents, half the delta, $25 per contract if you get stopped out. Now, you exactly know how much you're going to lose if the trade didn't work in your favor. Always set your stops at the local lows. We went long right over here. This was your entry price around this area, 392.55-ish, 392.80-ish. Let's assume 392.80. You set your stops right over here, risking 50 cents. Now, for a good risk to reward trade, you should have something like this. If you risk 50 cents, you should make at least $1.50 in profit. For example, your entry is at around 392.80. Your stop losses is at 392.33. Here, the risk is 50 cents, so you have a 50-cent stop. And now you need to take profit at around 392.80 plus $1.50 will be 394.38 and change, 394.50. So now, if you can't get that move from 392.80 to 394.50, if you can't get that move, don't take the trade. If you're taking this trade, you should have at least 3 hours. A good risk to reward. You're risking 50 cents to make $1.50. That's how it works. So now, let's talk about stops. So let's say you entered here, and let's play the session and see what happened. And you see the price come in contact with the pivot, and they reject the price and they're falling down. Let's say they're above the AVWAP, nothing to panic about, nothing to sell it on, because their stops is not violated yet. So it's still above your stops. They're coming back down. They pierce through the VWAP and then they hold it as support. They come all the way down and then they bounced. Now let's pause it right over here. You see this? We didn't draw this line. We didn't tell markets that it's going to be a support or resistance. They came in contact with the AVWAP and then they just took off. They bounced. Now you have another higher low. You move your stops from your entry to all the way right over here. So now, even if you get stopped out from your initial 50-cent risk, you're only right now risking somewhere around 10 cents, literally break even. So this is a risk-free trade for you right now. You don't have to worry about selling early or selling before or whatever it is. Your target still remains at 394.50 and change for most of the contract. So let's play it again. So you have your stop losses now at this low, which is at around 392.75. So let's see what happens now. You're not selling anything yet. You're not letting go of any of that. They pushed up, and now one of your targets is going to get hit. Check out what happened right over here. They hit 394, and now they're going to come back lower. So this is for day trading purposes only. We're not swinging shit. We're not swinging anything. We're not doing any of that. We're not moving any stops. We're not getting panicking. We're not panicking about selling early or selling less. Now let's pause it right over here. This is where things get interesting. You see them go all the way to 394.07 and then pull back, and now you can get rid of most of your share, most of your calls, whatever you got over here, because it's closer to 3R. You risk 50 cents at the beginning, and like let's say you bought 5 contracts right over there. You risk like 50 cents, which is $25 a contract. And now they went all the way from 392.88 all the way to 394. So you captured almost 3 hours with that trade. So you sell at least 3 or 4 contracts right over there and leave some runners. This is why I don't understand why people only trade with one contract, because you can't manage your position at all at the end of the day. You need to trade, at least have multiple contracts to manage your position. So let's say like the price went all the way to 394. You can sell like 4 of them and then leave one as a runner. What if the price just keeps going up and up and up? You don't know if that's going to just stop right there. So you need to have some exposure to the runners, to the upside, regardless of what it is. You have your stop losses on. You're moving your stops on a real-time basis as the price is moving. So you don't have to worry about all that. So now they pushed all the way up. They came back down, and what is this? Another higher low. So you move your stops from here all the way to right over here on your runners. You sold most of your contracts right over here. Now you have that one runner, remember? Now let's play. Let's see what happened. What happened here later. They came back down, and they're going to break this, and you'll see where it gets stopped out, and we'll go over how this trade would have worked in a real-time basis. Let's see. They came all the way back down, and they're going to consolidate here for a while before breaking this area. So now, interesting stuff. You get stopped out right over here. Yep, I think this is coming. Let's me speed it up. Come on, break it. Yep, there it is. So you're going to get stopped out right over here. You can see it. They broke it, and then you're going to kick you out right over here at this area. So you entered at 392.88. You exited all your positions, most of your positions on 4 contracts at 394, and you exited your runner at 393.46. Does it sound like a plan? Do you remember how we are in control of our stop losses? Now you entered right over here. You didn't panic when they come all the way back down over here because your stops are right here. They didn't violate your stops. You're not selling until your stops are violated. It's better to get stopped out than panic sell just because the price is moving mad. You don't have to worry about all that. Now, they came back to run a test. Look at where they bounced from. That's an important level I need you guys to keep an eye out for. They came in contact with our VWAP, and then they bounced exactly from the same point. Now, you move your stop from the lows of the day all the way to right over here, which was the next higher low. And when they pushed from there, you sell half of your contract because your 3 hours are done. They came back to run a test to the same area again. You push your stops all the way right over here, which was another higher low, and you're going to get stopped out right here. This is how you go about it. But this is not the trade which I took. The trade which I took came in at around 1:30 p.m. in the afternoon. That was a mad trade. This, I wanted you guys to give you a gist of how it actually works. How to deal with the stop losses. I know most of you just blindly set your stop losses at around 10%, 15%. Where will you know that? Like, for example, 10% in the option. How will you know where the price will be? You don't know. 10% of your options, you don't know where the SPY price will be when the options are down 10%. That is exactly how you lose money, because you get stopped out And then once you get stopped out, the market are just going to rip higher from the level in your direction of the trade. Again, be in control of your stops. You gotta set your stops at higher lows. If you're in calls, we entered with the stop losses over here. We moved our stops along the way, along the price as it moved to the upside. We waited for the first 5-10 minutes. We're not gonna take trades right over there. We took our trade once the price got above VWAP, and then they started showing strength. I know that we had our pivots in 393.50. I understand if you have questions like, oh, we had resistance at 393.50. Why did you buy it right over there? Again, those are my levels, not the market's. You don't know if the market is going to respect those as support or resistance or not until after the fact it happens. You won't be getting a good risk to reward trade if you buy it right over here. People who bought it here are going to sell it right over here because they're not going to wait until this level breaks before entering new position. They're going to be involved all the way from here, and they're going to sell this rip. That's the reason why you'll see it breaking again and coming all the way back down. Be involved early with a good stops. You should be fine. Don't worry about the pivots. The pivots, you don't know if that's the actual pivot or not until after the fact it actually happens. If you get stopped out, you get stopped out. It doesn't matter. Now, let's fast forward it a bit. Let's talk about the trade. Really, I had the volume indicator. I don't know why I don't have it. Something to note right over here. So let's just play the same session over and we'll just speed it up. And you can see how it actually played out in the rest of the session. They came all the way back down. Even now, you're not going to get stopped out because your stop losses were initially at 392.50. Now, there we go. All right, so our trade actually came in at around 1 o'clock. We're going to talk about that 1 o'clock trade pretty soon. Let me just go all the way down to 1 o'clock trade and let's see how it went on. Let me remove the replay. Yes, I don't need this. Right over here, you can see something unusual happen with the volume. You can see the volume in the previous session, right? Look at that 1 o'clock. You see the spike in the volume right over here? That is something to keep an eye out for. That is unusual. You didn't have that much volume all the way in throughout the session, and suddenly you had this massive spike. Remember how I said before, we need to anchor important areas. We need to anchor unusual areas. All those are important. So let's see what happened, what went on. So now let me go back and replay the same. And I'm pretty sure when you guys see this candle, it's as a beginner, I understand you'll be like, oh my god, I missed out, I need to chase it. We're going to talk about how to properly execute these types of gap ups. Let's see with the same. Here we go. Oh, whoa, chill out. Let me slow it down a bit. Alright. So, you saw these big candles up right over here. I'm pretty sure most of you guys chased it and got stopped out at these two candles immediately. So again, we need to know how to properly execute it. Big volume, massive volume right over here. You can see the difference in the chart. You anchor this candle right over here. And now, we wait for the price to retake that AVWAP. Let's see what went on. You'll see what happened. They broke the AVWAP. They came all the way back down. And now, right over here, they're going to retake it pretty soon and then march to the upside. You can see it right here. They're above AVWAP. They're above it. That's all matters. And now you know exactly where your stops should be. Let's see, just a minute. Wait for the price to settle. And I took the trade right over here. Yeah, there it is. Just a minute. So once the price got above it, I think it's coming. The next candle. Come on. No. And there we go. Yep. I had my entry right over here. And now we wait until this happens because we exactly know now where our stop losses is at. It's exactly at this low right over here. So you know, let's say you enter right over here at around 395.30. You enter at 395.30, and now you exactly will get stopped out when the price drops below 394.73. This is for a day trade. That's all we care about. We're technically risking 30 to 40 cents on this trade. Let's see how it played out. I entered right over there with stop losses at 394.73, and now you'll see how the price respected the AVWAP, and here we go. Boom. Now, You see how easy it is. You're not chasing this big candle. You're waiting for the pullback to settle and see the strength after the AVWAP, and then you buy it right over there at the strength that stops at the recent lows. We're not going to move our stop losses anytime soon. And we're going to wait for a higher low to be printed, and then we're going to move our stop losses and then manage the position. You see how big of a position this is, how big of a move that is from our entry. That's a $2 move in a matter of 5-10 minutes. You have a plan. You had a plan. You stuck by it. You're not panic selling anything. And if you want, you can cut some of your runners right over there when the 3R has been met. And then for your runners, you'll exactly know where to set your stop losses now when this pullback starts bouncing from a particular level. Check it out. Now they'll start bouncing from this level. You move your stop losses to this higher low right over, just a minute, where is it? Right over here. They'll mark a higher low. It'll be marking it somewhere around here. Just a minute. So they're pulling back to the AVWAP right now. All right, so let's say you set your stop losses right over here. Let's just assume. Well, let's not improvise anything. It's a hindsight anyway. So let's say you entered here, and then like you have this higher low right here. You see this bounce in the 1 minute. You set your stop losses right over here. Well, yeah, you entered at around 395, and you exited most of your position at 397, and then you stopped out on your runners at around 396.40. So it's a $2 move to the upside. So what else do you ask? Like, this is how you properly execute the same. You don't chase this move. If you're one of them who chase calls right over here and got stopped out because you got scared with this pullback, well, now you have a proper way to execute the same using the anchored VWAP. It's the slope of the VWAP which matters. We don't give a shit about if it's coming in contact with it or what it is. We buy the strength after the bounce, and then we just move our stops up along the way. We exactly know how much we are risking. We exactly know how much we'll be making. We exactly know where we will get stopped out, and we exactly know how to manage with our winners. Now, I hope this makes a little bit of sense on how I trade intraday trades. Even with today, a lot of people will. You guys just want to buy puts, don't you? Like, just blindly, like even in this rally, everyone, the amount of people who I saw was short the markets was absolutely unreal. They just want to keep buying puts. Even with this move right over here, they didn't want to get stopped out. Have a proper plan. If you have a proper plan, you don't have to worry. If you have to come to the Discord and ask random people on what to do with your position, you shouldn't be in that position in the first place. If you want to ask people what to do with your money, get out of that position immediately. Have a plan before entering the trade. Planning when you're in the trade is the worst thing you can do as a trader, and it's not going to help you out in any way in long term when you think about it. So, one thing I want you guys to note, we had a plan beforehand. When we open the trade right over here, we exactly know where we are going to get stopped out. You're day trading. If you can't keep an eye out, I'm pretty sure you guys are asking, how will I set the stop losses in my brokerage using the options? Like, there's no way for me to set it. Well, you're day trading. If you can't keep an eye out for your position, you shouldn't be trading anyway, because if you're getting in and out, what are you doing without looking at the charts? If you're trading in and out, if you can't keep an eye out for the position, do not day trade. I mean, why will you even take that risk? You can't even keep an eye out for it, and you're just going to be there for 5 minutes. You can't trust your brokerage with options, because option prices move real quick, and they're going to blow past your limit price only to like completely turn your options into a complete penny stocks. So if you can't keep an eye out for the trade, don't trade it in the first place. So does this sound like an execution plan to you? Let me start over. You don't buy, you don't FOMO into the strength. You can see it right over here. This is a big volume. This is a big, massive volume compared to that of the other volumes which we had throughout the session, which was weird. Now, we don't care why this happened. I want you guys to understand this. We don't give a shit about why this big volume candle happened in the first place. That doesn't concern us one bit. As a trader, the why part narratives changes based upon what the price does. Yesterday Federal Reserve said something, so the market ripped higher, and 2 days back the same Federal Reserve said something and the market went down. Stop listening to all this nonsense. It's not going to help you in any way. So now, unusual thing, there was a high volume and then the price pushed higher. Now, if you traded SPY before, you know how it exactly goes. We just want to make sure it's not a fake out. That's all it is. We need to keep an eye out for. If it's not a fake out, we're going to enter once they break above the AVWAP with stops at the local lows. That is exactly what I did. So now, huge big volume surge, pushed higher, pulled back, and then made a low right over here. We have our stops right now. We have our stops. If they break under 394.70, we're going to get kicked out. Simple as that. And then we place our entry as soon as they recapture the AVWAP, and then we ride it all the way down. This is going to be the quickest trade I've ever made in SPY, to be honest with you. 1, 2, 3. It's almost in 5 minutes. We're talking about like 20-25 handles in ES. That is absolutely crazy move. So you're not chasing it. You have a proper plan. You have a proper stops. You know how much you'll lose if you're wrong. You know how much you'll make if you're right. So this is how you enter a trade. This is the mindset which everyone needs to have. It's easy to say buy calls above this level and buy puts below this level, but when it comes to execution, you got to be very, very, very aware of how you're going to go about doing the same thing. Now you can understand where the AVWAP steps in. It's going to help you out in understanding the market psychology as a whole. It's going to tell you who is in control of the trend. It's going to tell you who is in, where's the money flow going? Is it in favor of buyers? Is it in favor of sellers? All these things are going to play an important role when you're taking the trade. As I said earlier, finding support and resistance levels is not a big deal. If I give a basic technical analyst course to a high school student, he's going to find support and resistance levels. How are you any better than him? The only difference between you and a shit trader is how you manage your positions, how you manage your risk at the end of the day. So now, with that being said, if you guys have any questions, god damn, I've been going on a fucking rant. If you guys have any questions, let me know. If not, we will go over another concept. We'll go over another example. We'll go over today's price action. I hope it gave you an idea on how to set your stop losses, how to move your stop losses. You shouldn't go with just 10% of your options contract, 15% of the options contract. You don't know where the price is going to be. How much are you risking? 15% of the options contract. Where is the price is going to be? No, I don't know. I don't care about any of that. No, don't be like that. You're trading the price. Options premiums move depends on a lot of reasons. A lot of reasons which you don't have control on. The only thing which you have control on is an estimate of how much you can lose before entering the trade. If you lost that money, cut the contract, enter the same again with a better strike price, better expiration, or whatever it is. This is why I don't like 0-date expiration, because when you enter the trade, you have to be right both with time as well as with the price. If you're right with price and not with time, you're not going to make as much as money as you think you will, because theta is going to eat away half of it. So even if you're day trading, always consider buying like a month out options, because if you have a plan before that you will be losing this much and you'll be making this much, those decisions shouldn't be impacted by some of the options creaks. With 0-date expiration, well, it's not in your hands anymore. That's the problem. How do you identify support or resistance levels going into next day? Alright, let me show you. Let me tell you how I do it. So you can go ahead and then do it on your own way, no worries. So here, leading into the next day, I will have 2 pivots. That's all I care about. Again, remember, those are my pivots. I always say this over and over again. Just because I have 2 numbers doesn't mean those are the market support and resistance levels. So that's the main reason why I always say you don't buy the dip, you buy the strength after the dip. You don't short the dip, you short the weakness after the dip. It's pretty simple. So let's say leading into tomorrow, you can go to the daily charts and you can see, can you agree with me that this level stand out? Like when the market touched these levels, 410, let's assume the market touched 410 and then reversed back big time. So 410 is pretty important. And right over here, 408. Let's say 408. It should be right over here. Let's assume right here. Okay. 408. Let me just move all the way back up. Alright, So let's assume tomorrow, leading into tomorrow's open, two numbers are important, 408 and 410. Is this going to help you in any way? No. You just drew two lines in the chart. Anyone can do this. Anyone with a basic knowledge of technical analysis can do this. I drew two lines on the chart. Does that make me a great trader? No, that's the main point of this entire stream, because how do I find support and resistance? I just go to the chart and I just see an important area, the area where the price got rejected before, big time. You can see this 410 area, the price got rejected and it fell from 410 all the way down to 391. That's a big drop. And it went all the way back up again only to get rejected and fell all the way down to 375. It's the reaction from these price points that are important. They hit this price point, something caused people to sell. So that and reverse big time from that number, which makes that number pretty important. Do you want something cool? Do you want to see something cool? Now, in SPY, go to the all-time highs and add the AVWAP to that all-time high candle. Oh no, I fucked up. My bad. Wait. Right over here. Did you see where the price got rejected today? Isn't that interesting? That is exactly sitting at around 408.50. So I will be keeping an eye out for 408.50 leading into the upcoming sessions. It doesn't have to touch and drop the entire thing. It's not going to collapse. I'm not saying it's going to happen, but something to keep an eye out for. Now, first things, as I said before, if you learned how to draw support or resistance levels, good for you. Really great. Fantastic. You know how to do it. You know the basics of, you know how to identify the patterns. Same with the Chris Sainz chart as well. Double top, double bottom, cup and handle. Who cares? None of it matters. If you can identify a pattern, it's not going to make you money if you identify those patterns. How you execute those similar patterns matters the most. That's why I never answer these type of questions. Is there a double top? Is there a double bottom? It doesn't matter. Tell me how you're going to execute it. Tell me where you're going to set your stop losses at. Tell me how much you will lose if you're wrong. You see how it makes sense? It doesn't matter that you can identify the patterns. It matters how you're going to execute the same. That's all it is. Right now, leading into tomorrow, I got two levels. 410.50, let's say 410, more or less, and then 408.50. Do I know that these levels are going to be acting as resistance? No, I don't. Especially if you traded Thursday and Friday, you should have known this by now. Resistance levels can melt through to the upside in trend days. Same with support. Support can melt through to the downside in trend days in case of a huge selling volume comes in. So you don't know that. So the best thing to do is just trade what the market gives. Keep an eye out for the pivot. I'm not saying support and resistance levels are not important. I'm just saying don't put too much emphasis on your levels. Your levels can be perfect sometimes. Market changes like reverse back from hitting your levels. It can be a right coincidence. Yeah, it can happen. I'm not saying you're wrong with your levels. I'm saying is focus on your execution and where you set your stop losses. Focus less on I have a brain fart. Fucking hell. Yeah. Focus more on the execution of the trade instead of worrying about why the market didn't respect your support or resistance levels. I think that's where most of the beginners go wrong. Let's say the market opens tomorrow and they just they just rip through with a big candle all the way to 412. What am I going to say? The market is still manipulated. They didn't even respect my levels. Really? Just because you draw two lines doesn't mean that's important. It goes for me as well. So yeah, as I said, just focus on the trend, see who's in control of the trend as a whole. Take the trades based off of that, so that alone will help. Today's price action was a little bit more confusing. They were confusing, because there were multiple up and down moves. Okay, multiple up and down moves, really, in SPY. I don't think it was pretty confusing, to be honest with you, mate. We had two types of trend into today, and both of them respected pretty good. Let me go right over here. I think I have my session. Yep, there it is. Alright, let's see what happened today. Alright, so let's go over today's session with the same set of rules, whatever we spoke about until now. Alright, so let's go over it. So, a lot of people were early in buying puts today, as always. Now, leading into today till the afternoon. This is the AVWAP from the session lows, from the session beginning. So, you saw how the price reacted. 5 minutes, you don't take any trades, you stay on the sidelines, and then you wait for them to break above the VWAP, and let's say you place your entry right over here. And where will your stops be? And your stops will be right over here at the lows of the day, which is at around 404.75. If your entry is right over here, as soon as they broke the VWAP, came back to run a test. And now they pushed higher from here to make another low right over here. You move your stops from this low all the way to over here to this low. And they came back to bounce and then bounced again. And then you move the stop right over here to this low. You see what I'm saying? More of my emphasis is on how you move your stop losses rather than what you do with your pivot points, because how you manage your position matters more. So right over here, they were still above AVWAP. AVWAP is positively sloping. No point in buying puts or shorting the tape yet. I don't see any point in shorting the tape until right over here. This candle happened. Until that happened, there is no point in buying puts. You can't just call the top at 4. Most of you had 408 levels as an important area. Did they even go to 408? Market didn't give a shit about 408. So you either did guesswork and then shorted right over here when the bulls were in control and then like sold it for like $1 profit. Where did you set your risk to reward at? Where did you set your stops at when you shorted this blindly? Is there any place for you to set your stops at? No. Why do you even take that trade then? It doesn't make sense. If I do take the trade right over here, when they broke under AVWAP, I know exactly where my stops is going to be. My stops are going to be at this local high, which is at around 406.62. And then when they keep bouncing up and up, I can just move my stops down along the way. My stops was right over there. They gave a bounce and then rejected and then came back down again. My stops will be moved. Let's say I entered my put right over here, all right? They broke the AVWAP. And then I entered my put right over here at this break. And you can see my handoff right over here from that AVWAP, alright? And then my stops will be right over here at the local highs. And then they came back, flushing back down, made another consolidation before bouncing lower. And then I move my stops right under, right over here. And then they made another bounce to push lower, so I move my stops right over here to this highs. You can see how it works. It's all about how you move your stops and how you execute it. Did you capture 3 hours? Did you capture 4 hours? Did you capture 5 hours? I know most of you guys don't understand what R means. What you call stop losses. Let's say like you enter a put, and if I ask you what's your stop losses at, you say 15%, I'm gonna whack you in the mouth. I'm telling you, it's like 15% of what? It doesn't matter. Like 15% means how much money you're willing to lose. What's 15%? What's the 15% value? So let's say the 15% is somewhere around $25. All right, the $25, that's the risk. That's the R. That's the amount of money you're willing to lose on a particular trade. And now, where will be your profit taking? 3R is going to be 25 into 3. So you'll be securing profits at $75. So you're risking 25 to make 75, which makes it a 3R. This is how you need to take your trades. So you can't just enter with the stop losses at 15% and secure profits at 10% and call it C profit and take profit. Now let's scale the same thing which you do for 100 trades. Scale the same thing for 100 trades. Let's say you set your stop losses on every single trade at 15%. And you always secure your profits at 10%. Let's say you win 50 trades and then you lose 50 trades. I'm giving you 50-50. I'm giving you the benefit of the doubt. This perfect 50-50 risk to 50-50 win percentage ratio. Best case scenario, that is. Will your P&L be positive? No, it won't. You'll be still in negative because you're cutting your winners early and then letting your losses run all the way to the 15% mark. You're not making as much money as you're losing. It's not how it's going to work. Always aim for 3 R's. Let's scale the same way to the 100 trades. You're losing $25 every trade you go wrong. And you're making $75 on every trade you're right. Let's give the same 50-50 ratio. For 50 trades, how much you'll be losing? For 25 per every trade, let's say like what, $12.50? Do I suck at math? Nah, $12.50, yeah. More or less around $12.50. And how much you'll be making though for 50 trades? 75. 1,500. You're still positive somewhere around $250 in your P&L, even with a 50% win rate. You lost like 50% of your trades which you opened, but your P&L is still positive. That is what risk management is. You need to lose less, but you need to make more. Your win percentage doesn't matter. That's why when people say I had a winning streak for 2 weeks but I lost right now, no, it doesn't matter. You are going to lose. It happens. That's how it is. You're not going to win every single day. It doesn't matter. It doesn't happen. Probability wise, it's not even possible. You're going to have some winning days. You're going to have some losing days. How you're performing in your losing days is going to make you a better trader than you bragging about your winning days. That's all it is. How less you lose. You can be wrong. Nothing wrong in being wrong. Don't beat yourself up. You can be wrong multiple times. You can be wrong like 3-4 times a day. You can be wrong like 3-4 times a week. It doesn't matter. Let's say you're down like for all the trades you take. Look, you took 5 trades. All the 5 trades were wrong. It's fine. Who cares? How much did you lose? For the 5 trades, let's say you lost like around $125 for the entire week because you're risking $25 for every single trade. And then you come back the next week, you get 2 trades right, and your P&L is back to a positive again because you're making $75 for every single trade and you're only losing 25. This is what risk management is all about. This is what matters the most. No one cares about your win percentage. No one. That's why any professional trader, look into them. You don't see them bragging about how much money they made. You don't see them bragging about how much, what cars they got or whatever it is. You don't see any sort of bragging because they know winning and losing is a part of the game. It doesn't even matter. It doesn't matter. If you lost, well, yeah, I lost. I know how much I'm going to lose. It's done. So what? Moving on to the next trade. That's it. If a loss is going to hurt you, then you didn't manage the risk properly. If you're in a position that's down and it's making you panicky, that you want to ask some random strangers in the Discord what to do with your money, well, you didn't manage the risk properly. You didn't have any plan. That's why you're asking me. That's why you're asking other pros in the chat who you don't even know any of our credentials. Why will you trust your money with us? I know what I'm doing, but still, I'm just saying in general. You let's say you just joined the server and you just saw me saying things. Why will you ask me what to do with your money? Why will you ask anyone what to do with your own money? You need to make the decision. If you see a trade idea, make it your own. Make it your own. Have your own plan. Don't blindly follow something and then start blaming someone else for your losses. If, let's say, I follow some trade idea and then I lose money, who pressed the buttons? I did. Who's responsible? I am. So that's how we learn at the end of the day. So don't worry about it. If you lose money, you lost. If you made money, you won. Congrats. So move on with the next day. So don't worry about the win percentage. Don't worry about the losing percentage. It's not going to help you out in any way. On Robinhood with cash account, does the stop loss order work the same? If you're talking about options, as I said earlier, if you're day trading, be very careful. If you can't keep an eye out for your position, don't trade it. I keep an eye out for a position manually. So because I know Robinhood or any other brokerage is gonna fuck it up if the options premiums move big time in any side. So if you're trading options and if you want to do the same stop losses, it'll be better to keep an eye out for it manually so you don't be in the mercy of that stop loss. Because let's say like moves like this, right? Let's say you had calls with stop losses right over here. Moves like this is going to move the options premium like $20, 20 cents, just like that. It's not going to fill you in. That's the problem. So you got to handle it manually. That's why you can always, like, let's say with the delta, it's $25 stops you'll be losing. It's better to have a leeway of like $25 to $30 range so that like you can't exit at the exact point with options for the same reason. If you trade shares, this strategy is going to make you the better trader. I'm not going to say best trader, better trader than you are right now. Again, as I said earlier, I always talk about stops. I don't tell you a trade idea without the stop losses on because AVWAP is just another tool, another indicator. You can be wrong. And there is nothing wrong in being wrong because you always have your stop losses in place. If you were wrong, you're going to get stopped out for a small loss. If you're right, you're going to make 3R to 6R. At the end of the day, that's all matters. How much you're risking, how much you're making, and how is your reaction to the losses, and how is your reaction to the profits. As a beginner, you got to understand that. If someone comes out and said, I made $20,000 today, $30,000 today, let them make it. Don't even worry about it. It's not your money, none of your business. Don't fall into this trap of like, look at how much money he's making, so I have to take as much amount of risk with my account as well. Everyone's account is different. You trade what you can. You trade with your risk-defined boundaries. You worry about yourself, do not see other people's plate and how much they can eat. You eat until your hunger is quenched. That's it, done. So the beginners, these are all the issues. They see these screenshots of P&L and they go absolutely crazy, thinking that, oh, I have to be like this someday, so I'm going to take unnecessary risk and blow up my account. So yeah, if you're a beginner, focus on the stop losses more. Focus on the risk management more. Technical analysis can only take you so far. You can identify support, you can identify resistance, you can have like multiple indicators, 13 EMA crossing 46 EMA or 50 EMA crossing 70 EMA, or double top, double bottom. Who gives a shit about all that? How are you going to execute it? How are you going to set your stop losses? That's all matters at the end of the day. So yeah, focus on that. And with AVWAP, I hope it's helpful, and I'm pretty sure you'll find even more knowledge. Now you know the basics on how to set things up. I'm pretty sure if you buy the book and read it, it's gonna be of even more help to you in the future. And the best I can do is show you guys to better traders so you can learn from them. So I learned a lot from Brian Chen, and I'm pretty sure you guys will as well. So the link for the book is down below in the description, so if you guys are interested in that, so go ahead and check it out as well. And for the trading view, same. If you're using Yahoo Finance, dump it. If you're using Webull, dump it. Doesn't matter. Those are all shit sites. You can't do anything. You can't keep an eye out for futures. You can't keep an eye out for anything over there. So there is no AVWAP, so it automatically becomes trash to me. So yeah, get into trading view. Like I saw someone saying that, asking me a question in Discord today, trading view is a bit more complicated. Can you recommend some basics charting software? Trading view, let me tell you, at some point you got to improve your skills. I understand it requires a learning curve. That's why like people who are so used to Robinhood find it difficult to move towards the other brokerages, because it requires a learning curve, as I said earlier. So I would say just stick by it, learn more about it. So more you use it, the more you get used to it. So that's all it is. It's one of the easiest charting softwares to use. So, and before I end this live stream, if you're new to the trading, if you're new right over here, if you're still trying to, I'm pretty sure you guys are still trying to figure out your strengths, your weaknesses when it comes to markets. All I can tell you is don't worry too much about your losses. There will be days where it felt like you got punched right in the gut. You're gonna feel like it. There'll be days where like you'll feel like regardless of what you do, you're not getting things right. Regardless of what you do, you're just losing. At the beginning days, one thing I can tell you is lose as less money as possible in your learning days, because most of the people quit because of the same. They risk insanely high amount of money when they're actually learning, and then they blow it all up just like that, and now they're just scared to even get back in again. Don't be like that. So don't be like that. As long as the losses are small, it'll be better. It'll be keeping you in the game for the longer run. Hey, Eric is here. What's up, Eric? I would recommend you guys following him as well. I learned a lot from him personally. Like whenever you see me talking about ATR, you can see it right over here. ATR. I wouldn't know shit about this if it wasn't for this guy. So thanks, Eric. Thank you for that. Thanks, Mario. This is a lesson I'll keep coming back to. Would you please post this video in the Discord resource? Yeah, sure, definitely. Definitely I'll do that. So keep your losses to the minimal. Keep your position sizing to the minimal. Paper trade until you figure out what you're doing. That's all I can say. Paper trade is boring. Well, if you want thrill, you can go to the casino. You have to treat it like a business, this one. So find your strength, find your weakness. If you ask me what my strength is, I can tell you right now. I'm good at trading gap down, breakaway gap downs. So I'm good at trading those. So that's the only thing which I usually prefer going for. That's the only thing which I keep an eye out for. So like that, what's your strength? Are you good at trading trend setups? Are you good at trading gap downs? Are you good at trading gap ups? Are you good at trading follow throughs? Breakouts, breakdown, what is it? You got to find out your strength and weaknesses. You have to have a system, proper risk management. You can trade whatever you want, but if you don't have a proper risk management, you're going to lose money. That's it, done. It's not about being right. It's not about being wrong. It's about how little you lose when you're wrong and how you manage your winners when you're right. So I really hope the AVWAP is going to help you guys with the execution in particular, and also going to help you with the stop losses at the end. So keep an eye out for it. So please, please, please manage the risk. That's all I can tell. Because it's kind of making me feel bad to see all the losses, because I know you guys are trying to learn, so make sure you do it the right way. Make sure you follow the good traders. Don't encourage mediocrity. So that's all it is. So the link of the book is down below in the description. Go ahead, check it out, and leave a like if you guys enjoyed it. So leave a like if you guys enjoyed it, subscribe. So thanks for the shout out. You're doing great for the trading discords you're part of. This is a great book to recommend, and the great exactly. So I personally learned a lot. It actually kind of changed my point of view when it comes to the markets. If you are one of those who trade using news or macro and all those nonsense, I highly recommend reading this book, because it's going to change your perspective on the markets as well. So I have access to a large amount of audience. The best I can do is guide you guys in the good way, so right way to the traders who are actually good. So go ahead, check it out. Link is down below in the description. Thank you so much for joining. And if you guys have any help, if you guys need any help about AVWAPs, hit me up in the Discord. I will do my best to answer it. So there is no one way of using it at the end of the day. You can use the same AVWAP multiple ways. Try to use it in a way to a strategy which you already have. Try to incorporate AVWAP to your own strategy. Everyone has different ways of trading, so I'm not going to say my trading is the only way to do with the AVWAP. Most of what I do is just mirroring Shannon's and then altering it in a way where like it helps me to trade it. Watch the book. I don't see it. Check out the description of this video. You should be finding it in the description of this live stream. Go down, click on the description. It should be there. The Amazon link is right over there, and the TradingView referral link is right over there, and the Patreon link is right over there. So you can check all these right over there in the description. So thank you so much for joining the live stream. I really appreciate it. So I'll see you guys in the next one. I'm glad it's helpful. All right? Have a great day. Peace.